You know, you get someone else to tell a word of mouth, and you heard about this guy, and it's a consistency. So you're doing a good job. Well,
through a checks and balance system, and I'm going to be able to see exactly what you was able to prepare without me actually having to prepare for you. You see what I'm saying? And the only way to get in there is if you purchase the ticket to the workshop. And you know, once you get into the workshop, that's my way of being able to cover filing fees, my time, right, and access to the software.
Okay, so is the workshop virtual or?
Absolutely.
Okay.
So the face-to-face workshop, it doesn't exist yet, but that's going to be more of a high ticket. But the virtual workshop and the time that we put into it is going to be something that's very affordable, right? I even have a subscription. Long-term rental. So this one is going to be all All right, let's get it. So we here. It's time. Let's get that off the screen for a second. I'm going to stop sharing my screen for a second. All right, perfect. Welcome, ladies and gentlemen, to another. Let's see. Let's make sure we're recording first. Are we recording? Let's see. Okay. Joel, where you at? Let's get Joel on the screen. Where you at, Joel? Boom. What up, my guy? Oh, your audio sound a little choppy. Now you sound like Let's see. Check that audio real quick. Check the audio so we can get going. Go right into how this thing works, how this thing is going to change lives. You know how taxes is such a tool and an opportunity that people need to really tap into to understand how to reach their financial goals, man. So let's see. Let me check for you. How about now? Joe, can you hear me? Nah, not yet. Not yet. I got you off mute. Let's see.
Hey Joel, hey Rashad.
Hey,
Joel,
Alex, how you doing?
Yeah, just coming in just to for Joel to check their mic. Oh, okay, so Joel probably is rejoining, but the mic you will see like yeah, it's an arrow there, like an arrow.
Yeah.
So yeah, basically just for that.
Oh yeah.
So just wait for him just a little bit.
Okay. So I'm gonna get started. Thank you for coming into the Dominate Your Taxes live webinar, where our plan is to give you the game on how tax professionals are preparing tax returns and making sure that you understand the strategies that go behind a tax preparation or a tax form, right? Most people understand taxes as something that the government is taking from you, right? And one thing that most people don't understand is you have a chance at getting it back. You have a chance at getting your money back, right? But it's all through education. It's all through understanding how taxes work, right? So once you understand how taxes work, you start to play the game differently, right? I think that where things have changed and where things have turned for us is that over time, we have been misled on how taxes work and what the purpose of taxes is for, right? Now, granted, taxes it has a lot to do with where we live. It has a lot to do with how we live, how we're protected, and how the government and the state uses federal and state dollars to enhance our living experience, right? Put the money into schools, putting money into the roads that we drive on, putting money into our communities. And all of that is great. All of that stuff is great. Social Security, public assistance, right? That's something that I have come from. I have come from that same walk of life. And honestly, back then, I had no idea on how taxes work. So trying to reach and trying to obtain my financial goals, it was impossible. It was impossible because as I made money, money was being taken. Right? As you're making money, money is being taken. And if you don't understand why and how to possibly obtain that money back because you're still growing, then you're already in a position where you're going to lose, right? It's super hard to have a business that's failing while still being able to pay taxes on bills while I'm already losing money. I'm already losing money. Why are you taking from? I'm not making anything, right? They say 80% of businesses fail. 80% of businesses fail in the first 3 to 5 years. So as you're growing, right, year one, how many people out there have businesses year one, it was not profitable, right? Throw a 1 in the chat if you had a business that year one, you did not make any money. You didn't make any money, right? I literally know what that's like. Having to invest into something that is not paying me. But it takes that consistency. It takes the growth. It takes the focus. It takes the faith to be able to reach that next level, right? Year one. Year two was just like year one for me. But I understood what I needed to do differently in order for my business to be more successful, right? So understanding my taxes was one of the number one things, right? How many people out here are actually working a 9 to 5 and running a business? Because this right here is for you. This right here, what I'm about to share right now is strictly for you. This is how you keep that money flowing back into your community. This is how you keep things coming towards you so that you can actually continue to keep investing in the business that you're working on, right? The business needs your consistency, right? If the business is not getting your consistency, then you're not giving it a true chance to win, right? I have businesses till this day that I've been working on for many years that are not successful. So what did I have to do? I had to continue to lower my tax liability, right? And that's what we're going to be talking about today. For all of my short-term and long-term real estate owners, right? Or renters, whether you're renting the property, own the property, all of my short-term and long-term leases, daily Airbnb, Verbo, or VRBO, you know, whatever you call it, extended stays, or even just renting a room to your family member. Did you know that you can, that's a deduction. That can be a deduction on your taxes that can actually help you to show more of your deductions, right? And what we're going to do today is actually go dive into the actual system that tax professionals use, the person that probably did your taxes, or if you did your own taxes, you're going to see something on a professional level that's going to give you everything you need to know, all the game, right? All the sugar, all the spice, right? It's going to give you everything you need to know and show you how you're supposed to properly deduct all your deductions to make sure that you're putting that max dollar back in your pocket. Because what are we going to do with that money? We're going to reinvest. We're going to take that money and reinvest, because a lot of us are out here working 9 to 5s, right? We're working 9 to 5s and we're paying taxes, right? FICO is, listen, it ain't going nowhere. It ain't going nowhere. I'm sorry, hold on, wait. I think it's FICO. I might have messed that part up, but it's on your taxes. They taking the money out, right? I be getting confused between FICO and the other thing, you know, credit and taxes. You know how it goes. Now, what we want to focus on is understanding what part of our investment into taxes do we have a chance at getting back. It's not the entire amount, but when we're talking about investments, every dollar counts. Say it with me. Every dollar counts, right? So let's take a little bit of a look into, matter of fact, I want to get my guy Joel in here. This is one of my business partners that have been in the tax industry with me over a decade. I've been doing business with this brother for quite some time. And if you're on Instagram right now, I really want you to comment the word ready so that you can actually get into my private group, preferably through YouTube, so I can actually show you the platform and the presentation that we're working on right now. So if you're just chiming in from Instagram, I want you to send me the word ready so that I know that you're ready to get into our private group, where you'll be able to have access to not only the resources that we provide, but the presentation that we're putting on, showing the back end of things. We want to show you exactly how things is working on that back end. And you know, this is where the real game is. This is where the sauce is being dropped, right? We want to make sure that you're seeing exactly what we see. So if you're just chiming in from Instagram, please comment the word ready so that you can get into our private presentation. Please log in. And if you're on YouTube right now, right? If you're on YouTube right now, please like and subscribe. This is something that we want to make sure our community is feeling the full effects of, right? We're feeling the full effects of, right? This is the game. If you're talking about understanding your taxes, instead of just bringing your tax problems, why not understand how to solve your own problems? And we're going to give you that game right here today. I want to do a quick introduction to my brother, Joel Tucker, the CEO of the Prosperity Network. Tucker, can I get I said, Mr. Tucker, sorry. Can I get a mic check? Are you there?
1 2 1 2.
Hey, you already know. You know, I'm glad that you're here with us today. I definitely want to dive in. You know, the topic that we're talking about today, real estate, you know, and not only is this gentleman is a real estate professional, a tax professional, but he's a realtor, he's an investor, he's a tax professional. So who else better to bring on this platform to work with me to be able to talk about short-term and long-term rental and the different strategies and what we do, right? Being able to actually have access to what we do. So, you know, before we go into it, man, I want to give you the floor as I prepare the software, you know, and I'm gonna navigate the software for you. So you're gonna have to let me know where to go, right? When you're talking about certain things. And we're gonna dive into a Schedule E. And if you don't know what a Schedule E is or a Schedule C, right? A Schedule E is for supplemental income, rental income, and the Schedule C is your profit and loss. A lot of times for businesses, and there's different strategies on how you use each one. So this education is not just for people that don't understand taxes. This is also for the tax professionals, right? Because there's a lot of times where we find ourselves preparing returns incorrectly, and we got to go back and amend. So without further ado, I want to give the floor to my brother Joel Tucker, the CEO of the Prosperity Network. Let's get it.
Hey, I appreciate the warm introduction, my brother. Good afternoon, good evening to everyone. Like Rashad said, my name is Joel Tucker. I'm the CEO of the Prosperity Network. Our goal as a company is essentially to help people to get to their version of prosperity, whatever that means for you, by providing you with the tools and the education and different resources necessary to get there. So taxes is definitely an essential part of that, and real estate as well. So having a conversation about taxes and real estate is something that I'm all for. So did you want me to just go ahead and get into it, or like where did you? I can't hear you.
My fault. I'm actually speaking to the people that's on live on Instagram. I'm trying to get them on this platform. So you just take it on, you just do your thing, and let me know exactly what you want me to do, because I'm gonna go right into the software so that we can show them the things, the tools that we use to be able to take this, take taxes to the next level with the understanding of how to execute.
Gotcha. All right.
For sure.
So I'll just jump into it. So real estate and taxes, I say one of the best benefits that you'll get with real estate in regards to your taxes is if you set it up the right way, you have the right tax strategy, you can create a lot of tax-free income with real estate. And, you do that in a couple of different ways. You have options. It really depends on what type of real estate that you want to get involved in, or what type of expertise you have, what you're comfortable with, what type of expertise the people around you have. And what I would like to highlight, no matter what kind of real estate you do, the biggest tax benefit I'd say would be depreciation. When you're owning a property and you keep it long term, you actually get a tax-free check to go against like all your other income. So say you have a $275,000 home, right? That's what you bought it for after everything that you put into it. You actually get, because you get to depreciate it on a 27.5-year schedule, you get $10,000 every single year to go against any other money that you make on that property. And then you also get to write off your interest and your homeowner's insurance and your HOA and any property maintenance cost that you have, any repairs. You get to add any improvements that you have to that basis, and then your depreciation check is a little bigger every year. And if you set it up a lot of times, you've got like either some tax-free money coming in there, or you even have it to where on paper you have a loss to go against the rest of the income you have, which is another tax benefit. You can actually just make money by paying less taxes. And then another huge benefit to real estate is like when you sell it, if your intention is always to like make money from it, you can actually sell your real estate and then put that money that you made, your proceeds, into another property, and then you don't have to pay any taxes. They get pushed out until the next time you sell it. But if you never sell it, or if you pass it on to your kids, that actually resets, and you end up not paying any taxes on that property ever. And if you had it set up to where due to your depreciation, all your other expenses and everything that you have going on with the property, you could be making money on that property tax free that entire time. So there's a lot of different things with real estate that can lead to a great tax strategy. It definitely should be incorporated in a couple of different ways.
So yeah, man. Thanks again for just giving that overview. Enlightening everyone on just how taxes work and, different strategies that we use. So, without further ado, we want to go right into it. I'm talking about taking you straight into the software, taking you into what we see as professionals, right? As tax professionals, you rely, or taxpayers rely on us to be able to execute something inside of a tax software that most people don't see. And that's what we want to change. I want to change how we're trusting tax professionals, because there's really not much that taxpayers do to check us, right? I don't have no way to check us. You trust us, and sometimes that can be a lot, because if we don't really understand what your goal is, we can possibly be executing the strategy on your taxes in a way that is not beneficial to you, right? So that's why for me, anytime I'm preparing someone's tax return, I have a very detailed interview process, right? So I'm gonna go ahead and share my screen. And let me know if everyone can see that. Joe, you can see that? You can see it? Yeah. Keep us, you can keep us small, Alex. Definitely keep us small. Can that be seen? Joel, can you hear me, Joel? Joel, you there? If you want to see this private presentation, please DM me the word ready. DM me the word ready, or comment the word ready, so that you can get into this private presentation. This presentation is just really about being able to show the back end of things and how taxes work, so that you can understand better and understand how to check your own taxes, right? Oh, is that good? Does it look good?
I can see it. It's a little small. The chat is small. Everything else, I don't know how to minimize the chat.
Is the chat too big?
Yeah.
Let me see how I can. Let me see what I can do. Let's change the view. I want to make sure that everyone can see what we're doing. Let's see. If you don't mind, Alex, you can actually take us off the screen. You can take us off the screen. Nobody needs to see us. Just let them see the platform. Is that a better view? Is that a better view?
Yeah, it looks fine.
Looks fine.
Yeah, it's still, I mean, it's still a little small. It was just like the chat picking up about 60% of the screen.
Okay. I think most people can move the chat. Does it look a little bit better with me scrolling? Let's focus in on this. Are you there? All right, so I'm gonna go right into what you're looking at right now, right? So right here it's just an example, but this is a 1040. This is just a tax return summary. This is something that we see every time we log into a new tax return. We're able to see who the person is, last name, where that person may live, social security number, address, who they may or may not have claimed in the dependent section. And the way this 1040 is broken down, you really just got to go down the left side of the wall of the return, and it breaks everything down, right? So one thing that I want to share today, and I'm going to just throw a scenario in here right now, but a lot of us have W-2s, and what's going on, brother? A lot of us have W-2s, and we don't understand why it's important that we pay the taxes on our W-2 income, right? And there's a strategy all for this. Right? So let's say in this example, you know, this person, I'm just going to throw some numbers in here right now. There's going to be a test employer, right? 1, 2, 3. See, recognizing what I usually do when I'm practicing. Practice makes better, not perfect. Makes it better. Always better. Right? I'm sure what am I doing here? Okay. All right. So let's just go in this scenario, right? Very simple. Let's just say this individual is roughly making on, you know, let's just say 60,000. You know, $60,000. I'm just gonna go whole number, $60,000. Roughly, this person paid their taxes on time, right? And I like to use the word on time because in most cases, looking for a single individual to pay roughly about 10% in taxes based on their income, right? We're gonna speed past all of this stuff. This is, you know, we really go over this stuff in detail in our workshop, right? So I encourage you to definitely join our workshop where we can go into this a lot more in depth. But this is what we do, right? This is what we do inside of that workshop, and you can actually go to. I think we're gonna drop the link at some point during this webinar for you to be able to see exactly how to sign up for the workshop. All right. Now, let me fix this here. That didn't look too much. Okay. Change that up. All right. So I'm doing the most. Let me change these numbers. Come on, baby. What are you doing here? Okay. All right. So this is what it looks like when we put your W-2 inside of a return. Right? You know, I'm gonna get rid of this. I'm gonna get rid of this. This is a different example that we use. I'm gonna get rid of this right here. And this is what it looks like when we first put your W-2 inside of the tax system, right? I didn't give them no state payments. Let's see what that looks like because I didn't get that right. On average, what is it, 8% for the state of Georgia? So we're gonna put some dollars up in here. I'm gonna go 3,800. Right? This is what it looks like when we first put a lot of people's tax returns or their W-2s inside of the tax system, right? A lot of times people be like, man, I could just use Turbo, I could just do this, which is cool. I'm not gonna deter you from, you know, the different tools that the IRS offers for you to be able to help yourself. But where we differ is in our workshop, we actually take you step by step and make sure that you understand your strategy. It's one thing to answer questions. It's an entire different thing to be able to execute a strategy based on what your financial goals are, right? And that's what we're doing. That's what our purpose is. Our purpose is to help you to understand your strategy, your financial strategy, and be able to execute it right here in the tax system, okay? Now, this individual has, let's say Airbnb, right? We're gonna go with an Airbnb now, understanding what form, right? The different forms that can be used. Joe, and feel free to intercept, because I'm gonna go into a Schedule E. I'm gonna go into a Schedule E, and you know, for this individual, let's say hypothetically, they own their property. They are renting out their property, and I have several clients that are doing this currently, and they get an opportunity to not only create income for themselves through having a single family home and, you know, short-term rental, right? I'm just taking you through briefly how something like this is prepared, right? And for the sake of this example, I'm going to be moving through quite a few things pretty fastly. But once again, if you're in our workshop, you get an opportunity to really see in detail how the software works, how to prepare your own return, and really how to help either your clients if you're a tax professional, or help yourself if you are a taxpayer, right? And these are the tools and resources that we haven't had access to, let alone having someone that is willing to take us through step by step in how to execute this, right? Now, one of the first things that I ask someone when I'm preparing their return is, especially when it comes to their short-term rental property, is, how profitable was the business? How did you document your income? How are you showing this, right? And, documentation is everything. When it comes to taxes, documentation is everything. When it comes to taxes, documentation is everything. That is the difference between you actually making it through an audit or having to pay after that audit, right? And you can have absolutely everything together, but that documentation, and you're not going to find yourself in a very successful place when it comes to coming out of that audit. So that's why I share and I advise heavily to make sure you're documenting. And when it comes to documentation, you got to understand what the IRS is looking for. When it comes to compliance, one of the first things they're looking for is receipts. They want to be able to see the company that you paid and the proper receipts to be able to verify. That's their way of verifying. And one of the best things that I love about not only this software that I'm showing you, and if you're on Instagram, you're just chiming in, all you have to do is comment the word ready, and you'll have an opportunity. You'll have an opportunity to get inside of this private presentation where we're actually going over and showing exactly how everything is being prepared inside of the tax system, the system that taxpayers do not see, right? This is the part that you do not see. We want to be able to show it to you as well as give you the access inside of our workshop. So one of the first things I'm gonna ask is, show me the income. Show me how much money was made. So let's just say, hypothetically, this person, like I said before, first year of business, first year Airbnb, Vrbo, they still trying to get it all together. They weren't that successful. However, they did have some type of cash flow going on. Let's just go ahead and say this company made $8,000 in the course of 12 months, right? In the course of 12 months, this individual actually made $8,000. Now here, and the system is designed to make sure that when you answering these questions and you're going through it, it's gonna calculate everything that needs to happen. Everything that needs to happen. So it says here, enter the number of days the property was rented at fair rental value, right? And this is a form of a deduction to show all of the days that your Airbnb, because there's a deduction there, right? We open up businesses and we start renting out our properties and giving people an opportunity to stay in our places, but there's a downside. There's going to be a time where no one is staying in that property. So let's go ahead and let's just say, like I said, this person was struggling 185 days at fair market rental value where the property was not rented, right? It says here, enter the number of days the property was used for personal purposes. Now, here, it shows you right here in the system, right? If this property was personally used, if this property has personal use days, you may need to manually limit certain deductions if the property has a net loss. Now, it's giving you exactly what you need to do to understand, right? Publication, IRS publication 527 is going to give you more details right here. So, for the sake of this live, I'm not going to go through it in full, but as you can see, this is a software that most taxpayers don't have access to, right? And when you're going through your, your self-preparing apps, all the different self-preparing apps that you can actually prepare your taxes through, you're not seeing this, right? So this is the education that we need, right? Let's go ahead and continue down. I want to make sure that we're able to get through this entire presentation. So check here if you are a member of a qualified joint venture. This is something if you have a partnership, but in this particular situation, this is one individual, and I'm also checking that that they actively participate. If you are not actively participating in this property, then this form would not populate and you will not get any credit after you put all this information in. Going down to the next checkpoint, check here if you are a real estate professional or sold or disposed of. All right, so let me tell you what this box is about. This really is just about being able to make sure that you're calculating any capital gains or any profit, as a professional. Now, I don't want to give all the information on this because this is why I have my brother Joel Tucker here. Joel, are you still there?
I am here. Yes, sir.
All right. So I'm gonna navigate this software, and I really want you to go through this form, and then we're gonna go into the other form as well. And we're once we pivot and go into why we would use a Schedule C versus a Schedule E, I'm sure that it'll all flow. But anything on this form that you want to review or correct me on, if I made any errors or any mistakes, or if it's something that I just left out, we ain't perfect. We all here to grow and learn. So I want you to chime in on anything that I'm talking about here on this page.
Okay. I think you did a great job, man, of pretty much explaining the process. The only thing I would add is if you scroll all the way down to the different things that you would check, the IRS has like different qualifications for actively participating, and also if you're a real estate professional. So it turns out really you only need to dedicate about 15 hours a week to real estate, and that makes you a real estate professional. And the reason that like any of it matters, whether you actively participated or whether you're a real estate professional, it allows you to get more losses. So if you did not actively participate, like when you say you lost $10,000 this year after all of your deductions on this rental property, you can't take that against your W-2 income, your ordinary income. You can only take that loss against other passive losses like stocks or something to that effect, passive stocks, other passive investments. But if you are an active investor and you're a real estate professional, then you can actually take a loss up to $25,000 against your ordinary income. So that's a huge benefit just by actively participating. And short-term rental owners like Airbnb hosts do actively participate. There is like only thing I would say with the short-term rental, you kind of got to be careful that because IRS doesn't necessarily have this thing called substantial services, which is like the key distinction of what you need to do to whether you file the Schedule E that we're looking at or a Schedule C, which we'll check out later. But as an Airbnb host, it can go either way. But if you're providing substantial services like in-room coffee or transportation or sightseeing, maid services, stuff that hotels do.
And that's what we're going to go into on this next part of the document. So I'm going to go ahead and follow up and go and continue through.
Okay.
All right. So, all right. So here we are. This is the list of the different, deductions that we're able to use. I'm going to go straight into expenses because as a Airbnb host, even myself, as well as all of the other hosts that are out there, it's super important you understand what you can deduct, how to deduct it, and where these different categories fall into. So, you know, as you can see, the categories is right here in front of you, right? I tell people all the time, preparing taxes is not as hard as you think. It really isn't. So really understanding how your own taxes work and understand that the software is the smart one. Yes, I do understand, you know, how to navigate the software, but navigating the software is what gave me the confidence to understand what I was taught and what I've learned. Because once you get into this software and you start to review the advertising costs, right? Let's just go ahead and put some figures in here. Let's just say you're a lot of people do this, and you know, shout out to my brother Pushman Mitch. This is one of the individuals that told me about this. Being able to take your listing off of all of these other platforms and being able to host it yourself. So if you got your own website, if you're running your own ads to allow people to make it to your Airbnb listing where they will be able to rent, that's advertisement costs, right? So that advertisement cost, let's just say in a year, let's just $750. If you ran ads, I would say a little bit more for this, but you know, well, I'm just gonna say $750 from now. I do believe in advertisement. I do believe in making sure that you're putting some money behind your brand, because if people don't know, then you won't grow. Okay, so travel. Now, travel can fall under, and Joe, feel free to jump in. You know, you are the real estate and tax professional, so you know you are overqualified for this topic. You know, so feel free to go ahead and chime in on any of these topics here. So travel can consist of going back and forth to the property. Travel can consist of being, you know, some. Oh, matter of fact, tell them about some of the travel that we do, and you know how we use travel as a deduction to work towards, you know, what we do, and how we deduct some of the travel for our businesses.
Well, I'd love to get into that, but I would like to. We're still on the Schedule E, right?
Yeah, you can you see it?
No, it's like the live is in front of it, so I can't really see like the exact
Oh,
schedule. But all right. So with the Schedule E, it's a little different because I mean at this current juncture in time, don't have any properties outside of Georgia, you know, or internationally. So, but if I did, you know, my money just to go out there and check on the property, to meet with my property manager, to update, do some repairs, whatever I have to do, you know, a free trip. Say I have a property in Barbados, and every time I fly to Barbados, all I gotta do is check on the property. I go out there for the property, and that's a tax write-off, you know, that for a business trip out to Barbados, you know, that to go and check out my property. So that might cost me like $2,000. And then while I'm out there, I have to get back and forth to that property, and every mile that I use to get there, I can write that off as well. Or my gas that I use to get there, I can write that off as well. Or if I have to take Ubers, I can write that off as well. So you know, travel you can write off, and you can also write off up to 50% of your meals expenses while traveling out there. So, I mean, provide some great benefits when you have real estate outside of that you have to travel to, because you know you can just write that off, and that goes against the income that you make on that particular property.
100%. So, you know, understanding what a deduction is and how to properly deduct it is half the battle. As you can see right here, I'm going over a few other categories like cleaning. So every time you get the Airbnb or your property cleaned, that's a deduction. That's something that has to go against the income. Commission, paying these different platforms to host your listing, because that's how a lot of people are being successful at their, you know, with their business. They're paying these platforms to be able to host it, right? Insurance. A lot of times, I don't care if you're renting, you're going to have to get that renter's insurance. Now, renter's insurance may not be a lot. However, it's a deduction. You want to be able to put all of these deductions in on this Schedule E. Now, my goal today is for you to understand what a Schedule E is, right? Understanding what a Schedule E is. If you are a property host, if you are, hosting on any platform, if you are renting out your room, if you have a house and you're renting out a room to a family member, a friend, whoever, right? You are with 100% within your means to be able to write off some of these categories, right? Your mortgage fees, right? It's a different type of write-off when it comes to putting them on different forms. In most cases, if you're writing off your home, your personal home, then that is going to go on a Schedule A form, which is going to populate a different write-off percentage. And that's what you got to understand. These different forms have different responsibilities when it comes to being on your taxes. Now, look at some more of these categories. Now, right now we're just kind of going through and putting in different. Let's just say this property is $3,000 in interest a year. Right now, we're just going through the categories. This is something that you would want to do, and this is what we do. This is what takes the time, right? This is the thing that we have to do when we're preparing a return. When it comes to repairs 100% go against whatever your bottom line that you made. Supplies, whatever those supplies may be, whether they're cleaning supplies, whether they're like Joel said, if you're providing coffee for every guest, these are supplies and these are things that you are providing as part of your business, and you're no longer responsible for the taxes on that money. This is why we write things off, to separate yourself from being responsible for the taxes on that money, right? So let's go ahead and continue through. I feel like I'm dragging y'all out a little bit. Let me go ahead and continue through supplies, taxes, depending on where you are, utilities. I'm talking about power bill, gas bill, if you have it, water, all of that stuff should be considered. Let's go ahead and put in about $4,000 for that for the year. Now, everything that we put on this document is for the year, for the last 12 months. Let's go ahead and continue. Let's go ahead and see where we are. Now we know that we made $8,000 in total income, right? We showed $8,000 in total income. Now, looking at this form, look at what we've done so far. Look at exactly what we've done, right? As you can see to the right, you can see Joel, are you able to see the adjusted gross income, federal and state?
Yeah. Kind
All
of.
right, cool. Say it again.
No, it's kind of hard to see. Like I can't. When I expand it, something weird happens. The live.
Okay, you're on your phone, so I don't know. Maybe that might be. Well, I'm sorry. You're a part of the presentation, so maybe that's something to do with it. Let's make sure. I'm pretty sure. I know we're recording this, so we'll get it later. But what's happening now is you're able to deduct what you spent versus what you made. And that's what this whole thing is about. Being able to identify what you spent versus what you made. And that turns into your adjusted gross income. As we can see here to our right, we started out at about $60,000, right? Started out at about $60,000, and we had a very minimal refund, right? A very minimal refund. So what's happening right now? What's happening is, based on the amount of money that you made, right, versus the amount of taxes that you paid, you're now being granted more money back to you because you have now officially overpaid in your taxes. This is why it's important to continuously stay in business. If you're not doing things in the name of business and you're doing things in the name of the personal, you will personally always be liable for the taxes due on that money. You will personally be liable for all the taxes due on that money, right? And it's two things that you need to understand. One, when you spend the money, yeah, the money is gone. But there's something that's attached to that money that you're not seeing. If you spent it in the name of business, you get to deduct it and everything is good. But if you spent that money in the name of personal, there is taxes attached to that. So if you spent $1 million in personal debt or personal spending, let's just say that's like 10% of that, right? Let's just take 10% of that. Now that extra 10%, what's that? What's that? 100,000. 10% of that is now you're responsible for the taxes on that money, and that's what the government is going to be looking for. But at that level, you're going to be responsible for a lot more taxes because now you're in a different tax bracket, and as you go up in tax brackets, the percentage of money that's due, it actually changes as you elevate. That's a whole other lesson, right? That's a whole other lesson that we're not going to get into today. But understanding the Schedule E, if you are a property host, one of the forms that you definitely want to make sure that you're completing is a Schedule E. Now, Joe, if you don't mind, give us the difference, right? Give us the different strategies and why we would use a Schedule E versus a Schedule C, right? And the Schedule C is a profit and loss statement, right? A profit and loss statement. And like I said, these forms have different responsibilities, and they also have different publications that the IRS goes off of to make sure that when you prepare your taxes, it's adequate. All right. So Joe, can you give us the difference between a Schedule E and a Schedule C, and why we would use one versus the other? I might have lost my guy. Let me make sure. Let me make sure my guy's there. Hey, Joe, you there, brother? Let's see. Okay. I think we lost him for a second, but give us 1 second. I'm going to get Joel back in here. And the reason that I have Joel in this room currently is because not only is he a tax professional, he's also a real estate agent. And, who else better to have present than someone that is studying not only taxes, but also real estate. So, Joel, thanks for coming back. What I was prompting you to do was pretty much explain the difference
between
and why we would use a Schedule E versus a Schedule C.
Okay. Well, yeah, I appreciate y'all having patience with my technical difficulties that I'm having over here. But essentially, I'll make it as short as sweet as possible. So it's really not up to you which one you use. I mean, it kind of is, but it goes into the tax strategy that you prepare for yourself in the beginning. So, but it's basically about your activity. So in general, you use the Schedule E that we've been going over. You want to use that for more passive activity. So, usually like longer term rentals and rentals where you're not providing substantial services that we talked about earlier. Those are where you're more going to do the Schedule E. Now, that's not to say you can't take advantage of some nice tax write-offs for the Schedule E. Say you have multiple short, long-term rentals, and that's pretty much all you do. All you need to do, like I said, is spend a total of 750 hours per year, which at the end of the day is like less than 15 hours per week. And you qualify as a real estate professional, allowing you to take deductions, not just against your passive income, but against your ordinary income as well. Now, so that's your Schedule E. You can depreciate your property. You got all the same write-offs on your Schedule E as your Schedule C. The difference is with the Schedule C, you're going to use that when you are like as a real estate professional when you're active. when you're active real estate investor, when you're an active real estate professional, then that's when the Schedule C is going to kick in, because that's just kind of how it works. And active, like a lot of other different topics with the IRS, is a little vague when they define it. But essentially, if you're renting out if you're spending a substantial amount of your work time on real estate and you're renting out your property, you're providing those substantial services, then you're going active and all your stuff's going on the Schedule C. And that actually might be great because now you're not limited to any losses. Like you can write off, if you lost $100,000 in real estate this year, you can write it all off against any of the income that you have. And then you can even roll that over to, future years with your business if you go into a complete negative for that year. The downside of being an active real estate investor and having to report all of your income on the Schedule C is that you may incur some self-employment tax if you do have a net profit. So, after all your expenses and everything, you may have a great year, especially if your activity is more flipping or something a lot more active like that. You likely will have a net income, a net profit, and you'll have to pay not only the federal tax, but also if you haven't set your entity up any other way, you'll have to pay self-employment tax of 15.3% on every dollar. Now, on a Schedule E, you avoid that because it's essentially investment income. So those are the main differences. Just pretty much Schedule E, passive, Schedule C, active.
And that's how it is done. Thank you again, Joel, for that explanation. This is something that we go over in depth, a little more in depth in our workshop, being able to show you exactly how it's done. A lot of times people go year after year and they let them taxes stack up, and then they find themselves in a position where they're like, financially, I can afford to buy a home, but as far as paperwork, I can't get no qualification for the home because you haven't done your taxes in the way that it needs to be done in order to be able to qualify, right? So this is way bigger than just being able to understand your taxes. This is the gateway to being able to put yourself and put your family on another level. We talk about generational wealth, but it actually starts with some of the small things, like understanding your taxes, understanding how your taxes is being prepared so that you can actually set things up for your heirs, right? Everybody knows now, trust. One of the things that you're going to have to, go over is how are you preparing your taxes in order to be able to flow things into your trust or flow your properties and your vehicles and all these other things. I could go into a whole wormhole of different categories of why you need to understand your taxes and how it starts here in order to go to that next level, right? So I'm going to get ahead and go through the Schedule C and show you how to navigate very, very briefly, right? So these are all the different categories.
You'd like to call Kelly Mobile?
These are all the different categories that you will go through, and it's simple as clicking, right? Hopping into this system. Now, once again, just like the Schedule E, the categories are already here. So let's say, once again, we got some money invested into advertising, contract labor. That's just pretty much, saying that you hired someone to provide some services. This can be a cleaning company. Let's say hypothetically, you pay, hey, I'm going to do a contract with this company, $5,000 for the year. They're going to be, anytime I get a booking, they're going to come through and clean it, change the linen, do all of that other stuff. That's contract labor. That also can go along with being able to provide a 1099 from your business to their business to adequately show where the money is going. If you don't show where the money is going on the business tip, then you're responsible not only for that money, but the taxes that are going to be due on that money. Once again, commission and fees, paying the platform. I am not the only person that knows that Airbnb is expensive on the back end. They do charge quite a bit when it comes to being able to host your listing on their platform. And each one of these platforms, they all have it. They all have it, right? So let's just say another $1,500. Let's just say another $1,500 was paid on this platform. I'm gonna be honest with you, it'd be a lot more than that. And as you can see, all of the different categories that it allows you, right? You see them all here. You have an opportunity to show where the money went. So that's why it's important to document. It's important that you document exactly where the money is going, where is it coming from, and having those receipts. And that's why we influence all of our people that use our tax software to utilize our mobile app, because the mobile app allows you to take pictures just like that. And it creates a digital file, right? It creates a digital file that gives you an opportunity to be able to continue with your day, get rid of the receipt, because half of the time those receipts end up fading anyway after you put them in your pocket or put them in your car, the sun hit them. Now you don't even know what it is. So we have to do better with documentation and being able to capture exactly what that receipt said, because that's the only thing that the IRS is going to respect, right? Once again, interest. We get to go over interest. Long-term care insurance, right? Insurance is the key. And a whole other topic, but insurance is definitely something that we all pay on our properties. If you're not paying it, right? Legal or professional services, anything that comes up with it, right? Let's say hypothetically you have a property, you have an Airbnb, and someone has decided to squatter in your property, right? And you have to go through and do an eviction and all this other stuff. Trust me, this stuff happens. This person done booked your property for 2 months, and now month 3 come around, and it's time to get them out of there. They in there, right? So that gives you an opportunity to deduct whatever it costs for you to be able to get them out of there, get them evicted, right? Office expense, pension or profit sharing. Let's say hypothetically you're not the only person that is invested in this, and someone else has to get paid. Profit sharing. I think profit sharing goes a couple of different ways, because that can also be a stock market thing. Rent or lease of equipment. You might have rented the property, right? You might have rented the property. That's how I started in Airbnb. I rented my property, and then I sublet the property to go to someone else, right? So really locking in on rental income, and understanding that when you're renting, all that stuff is a deduction, even down to Netflix, even down to Hulu and all these different apps that we use to make it cozy for the people that are using our properties, right? These are the things that we want to make sure that we are keeping track of, so that we can actually push that taxes off your back, right? You don't want to overpay in taxes. That's the last thing you want to do, is overpay in taxes. Repairs and maintenance. That's one of the reasons why I rented the property, so I wouldn't be responsible for that, and it wouldn't take away from my bottom line profit. Supplies, taxes, and lease and licensing. Travel, once again, going back and forth to the property to make sure that things is getting taken care of, whether if it's domestic or international.
That applies even to going to look for new property that you haven't purchased yet.
Absolutely.
We're going on a real estate tour in Cartagena pretty soon.
Absolutely. We, as a matter of fact, I was in Mexico 2 weeks ago. And one of the things that I did to make sure that I gave myself an opportunity to continue to deduct, right? I'm down to spend the money, but I don't want to be responsible for the taxes. One of the things that I did was I connected with a realtor, just like Joe did for Cartagena. When we go to Colombia, we're going to do a real estate tour to see these properties. Whether if we pull the trigger because it's a great idea or not, you have to give yourself an opportunity to get into the business by doing business activity. when you're moving in a business sense, it gives you an opportunity to disregard yourself from being responsible for the taxes that are going to be due on that money, right? So, and as I wrap up here, looking at the meals we all eat, make sure that when you're eating with your friends, make sure that when you're eating with your clients, that you're documenting and keeping those receipts, because as you can see here in the system, this is for 2022 right now, and it should be making an adjustment going into 2023. But you get to write off 50% of your expense, 80% of expense, or 100% of the meal expenses, right? And these are the different categories that the system is allowing us to do. Allow the tax system to have all the information. This is our form of AI, right? This is our form of artificial intelligence. Now, one thing that's coming along with that is you have to be educated enough to actually execute and operate the system. And this is what we want to create for our community. This is what we want to create for the people that are interested in our products and interested in our knowledge and interested in the services that we provide. If we can help you to understand how to navigate through this tax system and be able to put your taxes in a position where you're now able to obtain your financial goals, that's a win. That's not only a win for you as a taxpayer, but it's a win for us as tax professionals, because now it gives us an opportunity to not only keep you educated, but it helps you to bring us the proper documentation. If you decide, I don't want to do this, Rashad, I don't want to do this, Joe, I do understand, but I do want you to execute it for me, which is 100% fine, and we appreciate that. But the more we educate our taxpayers and our potential clients and our current clients, the easier you make our job, right? It gives us everything that we need in one place to be able to execute the strategy on your behalf, right? Or take you and execute the strategy for yourself. Either which way it goes, we offer both services because we understand that we can't prepare everybody's taxes. We can't prepare everybody's taxes. And the more tax returns that we have to touch in a short period of time, the more chances of us making mistakes. So what we want to do is be able to create a community, create a community of individuals that are looking to not only take themselves to the next level, but want to be poured into by myself and my brother Joel to be able to take you through the tax system, show you how it works, and make sure that you're able to navigate, our professional system to be able to go to that next level financially, right? Knowledge is the only thing. Education is the only thing that's stopping you from being able to tackle your financial goals, or even just maximize where you are. You may be in a position where you're like, Rashad, I'm good where I'm at. Well, great. I want to make sure that you can maximize exactly where you are, because there may be something there that you're not aware of that's preventing you from having an opportunity to maximize your finances and be able to have that extra money, put away that extra money for your emergency fund, put away that extra money for the down payment on that new home, put away that extra money for that next investment property. Because I'm always going to encourage you, hey, look, this year, this looks good. We got a refund. We got X, Y, and Z. Or, hey, we were able to reduce your tax liability, but if you want to reduce it just a little bit more, make sure you're doing more business and refraining from the personal, right? When it comes to my family, I don't like giving away money. I don't like just giving away the money, because when I gave away the money to my family member, number one, I'm crippling them. Number two, I still got to pay the taxes on that money. I'm still responsible for paying the taxes on that money. It's gotten to the point right now. Hey, look, if I'm gonna give anything, I'm gonna need that social. I'm gonna need your address, and I'm gonna need your first and last name or your business name, because I'm about to send you a 1099. Right? I'm not gonna give you this money, and I'm still responsible for the taxes on this money. Absolutely not. We ain't going for that. That's dead. That's dead. Because that starts to put my finances in a position where now I'm being financially irresponsible, right? I need that. I need to make sure that every dollar that is coming to me and that I'm responsible for paying the taxes on, that the next person understands, hey, look, if I'm paying you for this service, right? If I'm paying you to manage my social media, if I'm paying you to clean my house, or whatever the case is, I want to make sure that I'm not responsible for the taxes on this money, because I already gave you the money. The money gone, right? Now I'm still responsible for the taxes on this money, and that's where we're falling short. That's where we're falling short, not really understanding how it's working. So now, with that being said, this is the conclusion to this webinar. We really appreciate you chiming in and really just getting this game and really just giving us your attention, right? Attention is so expensive. Attention is so expensive. And it's really hard sometimes, because what you have to do is you have to be interesting. You have to make sure that you're giving enough game and you're offering enough opportunity to individuals to keep their attention, right? And that's what this is all about for me. That's what this is all about for me. So I appreciate you giving us your attention, and we look forward to being able to continue to pour out. Now, if you're interested in our workshop, this is an opportunity for you to get into our workshop, right? If you're on Instagram, I need you to DM me the word workshop, right? If you're interested in our workshop, I need you to send me the word workshop. If you're on live on YouTube, Facebook, LinkedIn, whatever platform, TikTok, whatever platform you're on right now, if you're on these platforms, I need you to comment the word workshop, because this is going to give us an opportunity to take you exactly into what we did today. Take you right through it, empowering you once and for all, right? Giving you the game, giving you an opportunity to say, look, we can do better if we had the resources to do better. And that's what this is about for us. DM the word workshop, right? DMing us the word workshop lets us know that you're serious, that you really want to be a part of this community, that you really want to tap in. And this can turn into something so much far bigger than you can imagine, right? Just imagine this for a second. Imagine if you learn how to not only just do your own, imagine you learn how to just do your own taxes, and your friends and family that have very similar tax situations. Imagine what you can do to help them, right? Imagine what you can do to help yourself by being able to just learn your situation and turn just that into a business. That can turn into additional income, right? That can turn into additional opportunities for you to be able to say, hey, look, I learned a new skill. I learned a new trade, right? I'm learning a new trade. And what I'm going to do is I'm going to take this. What's going on, y'all, on Instagram? I appreciate y'all getting in here, man. Appreciate the love, right? Learning this new skill would turn into additional income. Not only that, at minimum, you can save money, right? Average tax preparation fee starts at $500. If you go to any tax business, I guarantee you about $500 is what you're going to pay to get your taxes prepared. Not to mention if you have a business. If you have a business, it will become more expensive. On average, I'm going to say, I'm going to put another $250 on that, because these forms that we're showing you, right? You see how detailed these forms are. Additional forms can be $250, an additional $250. So come on, comment the word workshop. Comment the word workshop, empower yourself. Take yourself to the next level and see what kind of doors are being opened for you. See what kind of doors can be opened for you to make sure that you understand, number one, your own taxes. Number two, being able to help your neighbor, being able to help your community, right? This is what this is about. If you're not empowering yourself, if you're not taking your knowledge to the next level, if you're not taking your education to the next level, then you're dying. You're dying, right? you're dying. You're putting yourself in a position where you're not consistently growing. If you're not growing, you're dying, right? Rashad, I don't have the capacity. I'm already too busy. I don't want to get into another. I don't want to learn how to do this, right? I don't want to understand how to do my own taxes. Well, you're costing yourself when you say that. You're costing yourself. At minimum, just learn exactly what it takes for a professional to do your taxes so that when you come to them, you're coming more prepared, right? Poor preparation. Poor preparation always leads to failure, right? It always leads to failure. It always puts you in a position where you got to try again. I got to do it. Let me try this again. Let's stop failing our finances. Let's stop failing our family. Let's stop failing our children, right? The education might not even be just for you. It may be for the ones that are coming behind you. It may be for the person that's next to you, right? Our neighbor. Taking our finances more seriously starts with making sure that we're maximizing what's not going out, retaining our finances, retaining the money in our businesses, retaining the money in our households, right? We already have poor spending habits as a people, as a culture. We're the number one consumers, right? As a people. So we have to do more, right? We have to do more to make sure that we're more educated, we're more equipped, we're more ready, right? I said this last week. I was saying, I saw an article that said Black people are they have a higher chance, a higher percentage of being audited by the IRS than any other race, right? So if we're not more equipped than everyone else, you're doomed. It's only a matter of time. It's only a matter of time before your number's called and you're in a position where not only did you fall short on your taxes, but now you done got an audit, which is increasing your tax bill. And when you receive that letter, and I'm pretty sure anyone that has ever received a letter from the IRS, you start sweating immediately. You ain't even opened the mail yet, right? You ain't even opened it yet. And you're looking at it like, nah. But we can remove that tension by being more educated and being able to look at it and say, okay, well, I understand what they're saying. In a one word that the IRS uses that no one really pays attention to is propose. Anytime you get a letter from the IRS, the first thing they're going to do is propose that you may owe a balance or that something may be due, right? And this comes from the education. This comes from being in rooms like this. This comes from being equipped with the information and the support of a community to say, hey, look, I understand that the IRS may be proposing this, and I understand that they probably are looking for additional documentation, but I'm prepared. Rashad gave me the mobile app, and I took the pictures of my receipts, and I took proper documentation of everything that I needed in order to be able to say, all right, cool. I see what you're looking for, IRS. I'm gonna go ahead and send this to you before the deadline because I was already ready. I was already prepared. Man, look, this is what it takes. This is what it takes, right? This is what it takes. So with that being said, I appreciate everyone attending the Dominate Your Taxes webinar. And I look forward to seeing you in the Dominate Your Taxes workshop. This is where I'll be able to give you all the game. I'll really be able to take you to the next level by being able to introduce you into what I've been using for the last decade to run my business, right? To run a 6-figure business, right? I'm heading to 7 too, by the way, y'all, because there's so many sides to taxes. And you right here, you deserve an opportunity to get into this industry because it's a recession-proof industry. It ain't going nowhere. The IRS, the government has already created a demand, right? The government has already created a demand, and now all you have to do is find the people that need your services. And that's all I do, right? That's all I do. I don't have to run paid ads. I don't. I just start networking in my community, providing great services, and it turns into an opportunity for me, right? And now all I have to do is deliver, right? So with that being said, Alex, I appreciate you, being on the back end and being the switch master. Y'all give it up one time for Alex, man. Alex is definitely an individual that supports this company in a special way. I truly appreciate you, brother. And I appreciate everything that you do for this business and for my community, all the way in Peru. I'm coming out there, man. I'm coming to your city. I'm coming out there, man. I'm coming out there soon. And Joel, I want to say thank you to you for just being number one, for being my business partner, all these years, so long we've been working together. Let me turn your camera on, brother. Let me turn your camera on. You all right? Let me turn the camera on or no? Oh, I guess not. Let's get him down. So, I want to say thank you to everyone for chiming in. Each and every week, we're going to be doing new topics. So we're going to keep it fresh. We're going to keep it funky. We're going to get other guests. We're going to get, some of your favorite influencers on this platform and really just make this something that everyone can learn from. Our community needs it. Our community needs to know more about taxes. And what we reviewed today was a deep dive on just how it is to be a tax professional and the system that we use. And if you can get access to it, of course, I would love to give you access to this platform. It will literally change the way that you spend. It'll change the way that you set your financial goals, and it will change the way that you live. And that's ultimately what we all want. We want an increased lifestyle. We want an abundance, right? We want an abundance. And, we all deserve it. And one of the ways I've been able to maximize my own life is by being able to take the education that I seek year in and year out and provide it out to the people that are finding the information lucrative, right? It's all about leaving it better than what you found it. If you're not leaving it better than what you found it, in which you found it, then you're doing yourself an injustice, and ultimately you're not doing the purpose that God has put us here for. All right. So with that being said, I appreciate everyone chiming in on this live, on this webinar. I will be doing a lot more of these as time progresses. I appreciate it. Love is love. Have a great evening. Happy Sunday. Yeah. Hey, Alex, take me out of here.